it's Lizzie and welcome back to another Money Tip Monday video. Today we're going to be discussing the important things you need to know about your loan estimate and your closing disclosure statement when it comes to getting a home loan. Now before we get into all of that, guys, I am going to ask you to like, subscribe, and comment below on the things you'd like to see in the future on this awesome Money Tip video channel. It's so important to me to provide you with impactful information for your finances. Now, I decided to do this video because I get questions all the time on how do I read this? Where's my monthly payment? Where does it say my cash to close? And also I get emails from people saying, how can I use this document and be able to shop my loan terms? And I really feel that unless you understand the document, you wouldn't understand if you're comparing apples to apples and if the loan terms really match what the loan officer that you're working with is explaining to you. So today's video, I'm going to be breaking down where to find the information and then the similarities and the differences on both of these super important documents. A loan estimate is received at the very beginning of a transaction, and it's typically 3 days after receipt of purchase contract. Technically by law, it's when they have a completed loan application, but if you've been pre-approved, most of this information should have been completed prior, and so getting just the last loan terms, the property address and everything is what they need to have a full application. Now, your closing disclosure statement typically should be sent out 3 business days before you sign your final loan documents. Now, this can be sent out more in advance than that, but the law requires that a 3 business day minimum before you sign your loan docs. Now, it's super important that you know why you're getting it 3 days in advance, because it's going to protect you from any undisclosed changes in your loan. Typically, there are, guidelines and compliance involved in preventing that. But if you were to see something that doesn't match your expectations, you have 3 days to address them before you have to sign your loan documents. Back in the old days, people were at the signing tables and then you would see like they were bait and switched, right? They expected one thing and then got another, but then felt pressured to continue signing because they had nowhere to live. So super important that you know that you have 3 days to review this. Now, understanding the document. So the very first page on both the loan estimate and the closing disclosure are almost identical. So the very first top of the page will state whether or not it's the loan estimate or the closing disclosure statement. And it's going to show when it was issued, who's borrowing it, the property, the sales price, and all of your loan terms. So that's going to include whether or not it's a 30-year mortgage, a 15-year mortgage, your purpose, so purchase or refinance, the product, whether it's an ARM or if it's a fixed rate, and the loan type, which is typically conventional FHA, VA, or jumbo. The biggest thing to pay attention to on the loan estimate first page is whether or not your interest rate is locked in and when the expiration is. So you'll really want to make sure that that expiration date is on or after your close of escrow date. And if it is not, you definitely need to address that with your loan officer. Now, the closing disclosure statement is going to have a whole lot more information on this. The seller's names are going to be on there. It's going to show you your issue date, your closing date, and then the disbursement date, which is the day that we fund and record your loan. Now, what both of these documents are showing you is how much you're borrowing, how much interest you're paying, how long you're paying it for, and if there's some crazy things like a balloon or prepayment penalty that you need to factor. It's also showing you your total monthly housing obligation and what's being held back for taxes and insurance. At the very bottom of this page is super important because it actually talks about closing costs and what you need to bring at the closing table. Now, one of the big questions that I get asked is, is it the closing costs plus the cash to close, or does the cash to close incorporate the closing costs that are right above this number? So that cash to close number is the total all in. On your loan estimate, it's just an estimate for the best that they can do when they get your purchase contract. The closing disclosure statement should be very, very, very close, if not exact, to the final one that you'll sign with your final loan disclosures. So you're going to see all the loan costs or all the costs for your mortgage broker or your mortgage banker in section A of the loan costs. And this is going to show you a breakdown of whether or not you're buying down your interest rate, which will be called points, funding fees, tax certifications, processing fees, underwriting fees, wire transfer fees, maybe broker fees, anything that's paid to your mortgage broker or banker, you'll see in the loan cost section. In Section B are all of the services that you cannot shop for. So these are things like your appraisal fee, your credit report fee, your flood certification fees. This may include an upfront mortgage insurance premium. These are all of the costs associated with getting your home loan that are paid out to approved third-party vendors for your bank or mortgage broker. Now, Section C are services that you can shop for. These are things like the settlement company or the title company, and typically those things are negotiated into your purchase contract. So if you plan on shopping for these services, you definitely need to do it before you get under contract. Section D just tells you what all of the loan costs add up to. So this is Section A, B, and C, and just gives you a total breakdown of all of your costs. Now, one thing to note, this figure will include occasionally upfront mortgage insurance premiums that are paid for through the financing of your home loan. So sometimes when you're trying to calculate the bottom line figure, you'll need to know that it's included in your loan amount so that your accounting can be done correctly. All of the other costs are going to be totaled up in line I, and then J will have a section for the total cost for like financing the loan, and then the total other costs. So you'll see the total closing costs, and then you'll see any lender credits if they're applicable. Now, super important that you know, reoccurring closing costs are things that will continue to be charged after the home loan closes. So those are things like interest, property taxes, and homeowners insurance. So I get asked this question all the time: what's a non-reoccurring versus a reoccurring? Non-reoccurring are all of the costs of financing the home loan. Once the loan is closed, you don't pay for that again. The bottom portion of your loan estimate, because this is only 3 pages, is going to show you how they've calculated your cash to close. So this is going to include the total closing costs, which is D and I, your cost finances, so this is paid from your loan amount. So this is that upfront mortgage insurance premium I was talking to you about. And then it's the down payment funds, so anything that's left over, right, after your upfront mortgage insurance premium. Any deposits that you've made on the purchase contract, this would be known as earnest money. Any seller credits, any adjustments or additional credits, and then it'll show you what you need to bring for closing for the rest of your down payment, and then any closing costs. Now, the second page to the closing disclosure statement just does this continuation, so it shows you all of the costs, again broken down, under the same sections. It's just broken down all the way down here instead of like side by side. What you'll see here side by side are the seller paid and paid by others. Occasionally fees are paid by different parties, and so they'll be accounted for like this on this statement versus you seeing like a big lump sum credit. So then the third page of the loan estimate actually just shows you the big ticket item, bottom line things that you'll need to know when shopping a home loan, right? So it's how much interest that you'll pay in 5 years and how much principal you will have paid in 5 years. Your annual percentage rate. We're gonna link the other video that really goes through this in depth, but the annual percentage rate is the cost of the loan term expressed in an annual rate. It is not your interest rate. In fact, it even says that on this document. And then you'll see the total interest percentage. So basically you're gonna see if you made minimum payments for your loan term, how much of the total amount of payments that you made in that loan term went to interest. Okay, this will blow your mind and probably make you really upset. But just remember, there is the time value of money. So in 30 years, this number will not be worth what it is today. Then these are other considerations that you'll need to know. Cost of an appraisal, assumptions. Do they allow your loan to be assumed by another party? Homeowners insurance, your late payment fee. Can you refinance this? And then do we extend servicing? Servicing means that you will make your payments to the company that financed your home loan. Page 3 of your closing disclosure statement, it just will show you the differences between what was originally disclosed to you on your loan estimate and then what your final numbers look like. What you really want to pay attention to is the loan estimate closing costs versus the final estimate. these things will typically have gone down unless there was a change of circumstance. Then you'll see summaries of the transaction, right? So this is what mostly look like on the HUD settlement statement, the document you would get from the title company. But it'll show you your purchase price, again, the total of closing costs, your deposit, your loan amount again, any seller contributions, any gifts from any parties, any adjustments. Typically there's an adjustment for title insurance premiums, any county tax assessments or prorations, any aggregate adjustments for interest, escrow impounds, right? And then it'll show you right here at the very, very bottom, your cash to close, and it'll say from or to. On a refinance, you may see to. If you've over deposited funds for your purchase, you'll see to, but typically it's from on a purchase to on a refinance. Now, this part here, right, just shows you what the seller's breakdown looks like, right? And, if the seller is receiving any funds, typically this will be blank on the lender's closing disclosure statement. You will actually see this on the final document for title. Now, the fourth page of the closing disclosure statement is going to be very similar to, again, that third page in the loan estimate, but it's going to go over all the loan calculations. So again, all the total monthly payments, the finance charges, the amount financed, which is not the same as your loan amount. This is the loan amount minus the prepaid finance charges, so everything that's included in your APR. And then this will also show you what your APR is, and then of all of the cost of the home loan, right? What percentage you actually paid in interest. It'll show you, again, the details forwarding your appraisal, contract details, the liability that you have if you were to foreclose, your refinance options and tax deductions. It also lets you know where the consumer finance website is and contact information for your loan officer, your real estate brokers, and any of the settlement agents, right? So all of that information is going to be there. Then the very final pages, again, a summary of all of those fees that you could have shopped for before you got under contract, right? So these are all of those fees. They just want to be full disclosure on everything. So it's why it goes from 3 to 5. The 5 just breaks it down in a whole lot more detail, but the bottom line figures should be very similar between the loan estimate and the closing disclosure statement. And if you see big differences, it's definitely important to talk to your loan officer and understand why. Now, I know today's video was a little less gify and definitely more informational, but it's super important for me that if I'm talking about money tips, that we really talk about the money and how to understand it when it comes to the cost of buying a home. If you have any questions, because this was like a lot of information, I'm happy to break this down for you in detail, even if I'm not the one helping you with your home financing. So let me know, guys. I'd love to hear from you. Thank you again for tuning in to another Money Tip Monday, and I will see you guys next week.